I promised I'd send out a video on Sunday, and here it is on natural gas. This video is going to be perhaps a little bit higgledy-piggledy. I'm going to try and get a few things across that I'm thinking about. So please bear in mind that it might not be as flowing or as fluent as it normally is. The first thing I want to do is to play you a video. Let's have a look at what I said about 2.5 weeks ago in this video right here. $2.05 should provide more of a serious reaction. And what we want to see is a real violent move up from the bottom. We want to see some massive strong candles. We want to see a big percentage, 10, 15, maybe 20% move in a day to sort of rocket ship us up from the bottom here. But these moves come out of the blue, so we could expect to see that at any time now. We're going to be moving up potentially quite violently up to $3, $4, or $5. But when we get there, we can expect an equally strong move back down, as some of those positions will be covered to cover the losses, essentially. So you've seen my thoughts on natural gas about 2 weeks ago, 2.5 weeks ago, and that's exactly what's happened. We had this recovery from the bottom around about $2. I said $2.05, but we got around $2, and you can see we actually did get that V-shaped recovery that I was expecting or hoping for to occur. Now, you know my positions. I was long at slightly higher up at around $3, just above $3. I took a loss on that trade, and then I rebought a bit lower down, and I rebought some more at the bottom. And I've covered some of the earlier positions. I'm still holding a long position. A lot of you are holding long positions on natural gas. Some of you from the bottom, some of you are still in a loss. So that's a situation that's facing us. We need to decide where we think this might go. There are a few clues from those previous videos, and you'll notice a level on there of $3.31, which I had highlighted in that video. And we're now at $3. Above us is $3.13, where this 50-period moving average is. But if I move that up to $3.31, which is what I had in that video, you'll see it's the beginning of this resistance range, which I had drawn in here earlier. We've got 3 potential resistance levels above us. I'm going to tell you how I'm going to approach this. And once again, you need to approach this exactly as the way you see fit. I'm no particular expert in natural gas. I'm a market trader. I trade different instruments, different commodities, currencies, stock indices, metals, you name it. And natural gas is just one of them. But I'm applying simple technician logic to what I see on the charts. And I'm also invested in this instrument myself. I've got skin in the game, so to speak. It's a very good book by Nassim Nicholas Taleb, by the way, called Skin in the Game, which you should read. Now, we've got 3 levels above us. We've got this area right now. We're exactly at $3. So we've got a round number. Round numbers are important in all forms of trading, and we're at this round number at the moment. So $3, big, strong, bullish day on Friday, which took us up to that level. We've got a shaven head candle, more or less, tiny little wick on the top, but we've got no wick, hardly any wick at the bottom, hardly any wick at the top. That's a very strong bullish candle. Sometimes a shaven head candle, shaven head meaning there's no top wick, can be a potential reversal signal, simply meaning that the market got that far very powerfully and very strong and just stopped dead in its tracks and closed at the high of the day. So we might have resistance at $3. I have a feeling, however, though, that we've got all these magnets above us at, first of all, the 50-day moving average, which is now at $3.15 to 17. Let's be precise, $3.17. And then we've got the start of this resistance zone that I had drawn in from quite a long time ago, starting at $3.30-ish, moving up to about $3.50. That area up there is where a lot of traders will have taken long positions, including many of you who are watching this video. So what do I think is going to happen? Well, I think we've got some problems ahead of us, but overall, I think we've got enough bullish momentum. You can see we tapered off over the last few days before Friday, during the first part of the week. We tapered off. We formed all of these hanging man candles, actually 4 in a row eventually, which is normally a bearish sign, and we ran out of momentum. The 4th candle in that series was actually slightly bearish. In other words, it closed lower than it opened, but Friday saw a massive rally going upwards. We saw the stock markets rally. We saw all sorts of moves in gold and in currencies and stock markets. So natural gas kind of followed suit along with what was happening in the rest of the markets. But we've got this shaven head candle, and we've got 2 levels above us. $3.17 and $3.30, which is the start of this area where there will be a lot of long orders holding their positions, just waiting to cover and get out at break even. That'll be an area of great relief if it is reached in the next day or two or three or going forward. Now, we've got some problems. First of all, we've got the $3 level, the round number with a shaven head candle. It could be construed as a dangerous level. Then just above that at $3.17, we've got the 50-day moving average, another resistance level. And then we get into this zone of resistance where prior longs will be looking to cover their positions and get out, as I said, with great relief at break even. And that is somewhere between $3.30 and $3.50 or 55 or even $3.60. We could move that zone up slightly. So the big question is, how do we trade this? Let's just have a look further back, and I want to show you where these levels are in terms of prior price action and resistance levels. Remember the overall zone for natural gas, somewhere between $2 and $3.50. That's the overall zone. Go and have a look at the last video that I did on that, and you can see that's the natural trading range for natural gas. We're still right in the middle of it. The top of that range is $3.60-ish. The bottom of that range is $2. Anything outside those ranges would be considered abnormal. I must emphasize, I only trade commodities like natural gas from extremes. I said this video would be a little bit all over the shop, so I'm going to throw thoughts in as they come to me. Please forgive me for the lack of fluency. But natural gas is a commodity which can move in extremely large moves from time to time, and not all that infrequently. You can see all over this chart, there are areas and times where natural gas has moved 10, 15, 20% in a day or two or three, and anything like that is possible when trading natural gas. It's subject to the whims and the fancies of a very volatile supply and demand equation and very difficult to read technical chart. So we've got all of that to think about. I only like to trade these from extremes. That's why I was looking to buy down near the $2 level, initially around about this top level here at $3.30 to $3.50. We'll call it $3 to $3.50. That was my first attempt. It's an extreme range because it was the top of the normal range and it was potentially an area to bounce. It didn't bounce, not for long anyway. Then we moved down to the next extreme part of this move, and that was at the bottom of this range at around $2. I like to trade commodities, all commodities, from extremes, but particularly natural gas. We're no longer at an extreme. We're right in the middle of this range denoted by these red lines. I think I could move that red line down there, but I'm actually going to clone it. So these red lines here, from that lowest red line just around $2, just below $2, to this highest part here above this pinky orange sort of zone at the top at $3.55. This is the natural trading range for natural gas. We're no longer in an extreme price zone, and it makes it much more difficult to trade. Having said all of that, the way I'm going to approach this, considering that I'm holding a long position and I'm asking the same questions that everyone else is asking. Should I cover now? Should I take profit? Where's it likely to go? What is the best strategy to make sure that I protect my risk on this trade and that I protect my profit that I've already got in hand on this trade? I don't want to lose my profits. That's the same as taking extra risk. It means exactly the same. It's money that eventually will trickle out of your hands if you play it the wrong way. This is the way I'm going to play it. I'm going to move my stop loss to break even on this trade so that I have no downside risk. I'm then going to look to hold this position, and I'm going to wait for a move up, and I'm going to watch it very closely on the shorter term charts, the 4-hour chart, etc., day chart. That's what we're on at the moment. And I'm going to look to see how we react if we move up towards, first of all, $3.17, the 50-day moving average. Forgive me, I said I was going to look back further in time to see where we are now in terms of $3 and $3.17, $3.20, $3.30. Let's have a look how those lines line up with what we've seen in the past. So I'm just going to keep the same lines on there and scoot back to quite a long way back on the chart, well, as far as this chart goes back. And you can see straight away that natural gas trades very often within this range that we're in right now. So we're at $3 now, that's here, and kind of below the high of this zone and above the low of the zone, and that's where we are at the moment. Above us, going back to 2020, we've got these two spikes right up into that $3.30 level. That's obviously an area of concern. There we get another spike into $3.30 a bit big mishmash there. Let's have a look at anything else around this area there. At the top of that zone, we get a bounce off there. That's at $3.50-ish. And as we keep on going, we expect to see the price reacting around the same levels. That's where we are today, the same sort of thing. And actually this chart, I haven't got the Henry Hub chart because I've got my lines drawn in here. If you go back any further than 2020 or 2019, you'll see these lines, often reaction points. So we know where the levels are on natural gas. We know that the natural trading range starts at $3.50 or 60. The lower part of that trading range is at around $2, maybe $1.80 at the extreme. Anything in between there is the natural trading range. But we've also got some clues. We've got some red lines drawn in which show us where the intra-range bounces, rallies, dips, and so on, and rejections are likely to take place. I think we're going to get up to $3.25, $3.23. Potentially we might stall at $3.15 or 16 or 17, where this 20-period daily moving averages. And potentially even we might stall at $3. My strategy is when we get up to these levels here, I'm going to start to take profit. I want to take my profit the moment we get to $3.20. Let's call it $3.20. That's probably where I will take all of my profit. I'll tell you what I'm going to do after that once I've taken profit. Right now though, at $3, I'm going to hedge some of my position so I can lock in some of my profit. So I'm going to hedge, not the entire long position, but I'm going to hedge, I don't know, I haven't thought about it yet. I'm going to think about it over the next hour or two, but perhaps I'll hedge 50% of it with a short position to counteract the long position. As we get up higher, if we move higher, I'll take care of the longs and the hedge and get out altogether at $3.20 to $3.25. I said $3.20. I like the 80s and the 20s. They're often price magnets, act as fantastic areas to trade off. So probably $3.20, I'll cover the whole lot and get out for a profit, including the hedged short trade that I'm going to talk about actually. The hedged short trade, I might actually add to that short trade. I'm going to think about it if and when we get up there. I'll have to do another video on it. But ideally, once we get up into $3.20 to $3.50 or 60, I'm going to be looking to actually sell natural gas and head down lower. I don't think we're going to break up here easily. This is the area where all of those longs, and there are an awful lot of them, and they don't even begin here. They begin a lot higher up. But there'll be a lot of long positions who will want to cover their positions. They'll want to exit those positions. They'll want to cut any losses that they might have perhaps at that level. But also those who can get out at break even at that level will be trying desperately to do so. And that will create a potential reversal in the trend, and we may head back down to support. Support levels, if we do that, if we do exit and go short, which is something I'm seriously considering. So remember, I'm going to be taking my profit. I'm going to hedge some of it now at $3. Take my profits at $3.20, maybe $3.30, I don't know, but probably $3.20. Remember the 20s and the 80s. And then I'll be looking to start to sell into these areas, and I'll decide what to do with my short hedge position at that time as well. I might just close the whole lot, or I might keep on that short position, the hedged position, which would be 50% of my current long, and then add another short position to that to cover the loss. Perhaps on a bounce down, I can get out at both at break even. I don't know. Hedging strategies become complex. They're difficult to explain and describe in short videos like this. That's my strategy. And if we do go short, I'll be looking to short around $3.20 to 30, probably 20 to 25, potentially all the way up to $3.60. My exit area for short positions will be back down at $2.60, where this 20-day moving average is curling up, and we have this beautiful plateau, flat top support level where the price is likely to bounce again. We'll be right back in the middle of the median range for natural gas over years and years and years. That's the level where it likes to rest at around $2.50. So that's my overall strategy. I hope you found that useful. If you did like this content, please like the video, subscribe to the channel, blah, 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 all the rest of it. It really helps me if you show your appreciation by subscribing and liking the video. And if you've got any questions, please just put them in the comments and I'll try and answer as many as I can. So that's natural gas. It's now Sunday evening. Markets are open in a number of hours' time. Take care. Good luck. I hope you make the best of it.